Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Monday, May 1st, 2023. Before I click on all the charts, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time the Tesla and Apple report are uploaded for YouTube viewing, as well as an occasional stock pick and so forth and so on. Also, check out wickedstocks.com if you don't know it exists. It's our website where we offer a sort of a private subscription-based platform that provides daily analysis in the Triple Q, daily analysis in the SPY, two individual stock picks a week, 5 to 10 minute video format you never actually see on YouTube. That's 8 a month. And also weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT. So without further ado, let's jump to the charts. Take a look at the long-term view here. This is a formation, if you've been watching the Tesla report for the last number of months, you're familiar with. Our ceiling of resistance through the rest of the year, essentially, is 220.62. And what I mean by that is it can contain buying as we move through the third quarter, even through the rest of the year, and we can fall off from here in a meaningful way. And inversely, if we close above 220.62, I see a good low for the year with gains then expected, steady gains then expected, a bullish continuation into later year. But I'm not even going to go there because we're not even close to doing so. I am going to move to this chart here. This sort of catches you up on where we're at. About a month ago, maybe not as far as a month ago, I don't have the date in front of me, but 3 weeks ago anyway, we settled below this channel structure that set off a 2 to 3 week sell signal to the channel bottom at 152.74, which we tested amply last week. Wednesday, Thursday, Friday was a recovery day after having come off this area. Thursday was an open just below it. I saw a YouTube comment about playing the short side with this open below. For day traders, fine. But in terms of position traders, for those of you trading the 3 to 5 day swing, the 2 to 3 week position, or the near term investors, the 2 to 3 month position trades, this is bottom picking territory. Also, profit taking territory. At the time that we had the sell signal 3 weeks ago, I mentioned how you may reach for 155 or 145 out of the money puts that don't expire for at least a month. So we have entered the profit-taking zone, and inversely, this is now setting yourself up for a potential rally. It's not obviously baked in that we are going to rally back into the low 200 area, which I'll show in a moment. In other words, this channel top coming down. But, with regard to channel dynamics, that is the draw. The market is now drawn upward for recovery. Is it inevitable? No, but that is what you want to position yourself for. So as I've been saying, as long as we're holding above this 152.74 to 146.06 region, which is narrowing ever so gradually, you're positioning yourself if you're a near-term trader. And what I mean by that is over the next week or so, that's more short-term, you're looking still for now the lower 170s and dropping daily. And in fact, the development late last week, pushing through, closing above this channel top that is today at 156.38, does indicate actually the low 170s as a target this week, possibly today. So you could see here, now I'm getting to the day itself. 156.38 is your intraday support. Decent support, may actually contain daily selling pressures. All the minor points have been carefully chosen. They're all well suited for more aggressive day traders. 156.38 intraday support. If we break 156.38, 152.74 in reach, which is, once again, as you can see lower right, the start of a range of meaningful support, multi-week containment down to 146.06 that can absorb selling through May into June, and from here, expecting the low 170s this week and over the next 3 to 5 weeks, I'd say by the end of May, this very low 200 area, 201.22, which on the weekly chart is shown here at 198.17. So you see upper right, 198.17, 201.22. If I had arrows, I could say that this holding above 152.74 will keep this low 200 area, upper 190s in reach by the end of May. So getting back to this chart here, upside today, I've got 166 even, and this is once again for the day trade. 166 even is nothing more than, if you follow the sequence, on April 20th, we had the lower profits report that, obviously there was a huge gap south. The market continued south to our targeted support. That was part of the sell signal, really, technically. But 166 even, if you follow the flow, we had the gap lower opening. We bottomed out that day, and the rally attempt off of that low was 166 even. A couple days in a row, actually, before we fell off and completed the move. I don't know if we've actually completed the move, but I'm going to say that we may well have completed the move at 152.74. So on an intraday basis, pushing through that failed attempt at 166 even the day after the big sell-off, I think carries with it, continuation to the upside, expecting then this 170 and a quarter to 172.30 area. This is a 2-point range. 172.30 for me is the more meaningful by a hair because it is projected off this February high, this significant high, whereas the channel top itself is just the last month or so. But nonetheless, a 3-star weekly containment may contain weekly buying pressures, and from here we can fall back into the low 150s again by the end of next week or sooner. So this area here, low 150s to low 170s, this is our two-sided framework if you're more in the 2 to 3 week time horizon. We could fall off from here back into low 150s, mid 140s, 146.06 within a week or so of testing the low 170s. That is a real possibility. So for the 3 to 5 day swing trader, it really is buying, or if you have bought 152.74, holding out for the low 170s. When we push into the low 170s, it is taking profits and then playing the short side back into the low 150s. So, despite the fact that I'm anticipating the low 200 area again by the end of May, we could spend the next week or so in this sort of consolidated framework that could play out between the low 170s and the low 150s. So if we push into the low 170s, take profits, 3 to 5 day swing traders, play the short side by being either short the stock or reaching for 152 out of the money puts that don't expire for at least a week. You may go a couple of weeks out on that and then taking profits again, so forth and so on. Now, if we do over the next few days, and we may close above 172.30, that is consistent in my view with the bigger picture, which is to say through May, expecting by the end of May this low 200 area and closing today above 172.30, I do think within 2 to 3 weeks or less, we should push into this low 200 area, which once again on the weekly chart comes in at 198.17. So it really is a upper 190s objective because that 201.22 is dropping gradually. And by the way, this area here can absorb monthly buying pressures when tested, which is to say why I have this as a 4-star resistance up here. And then, of course, even if we close above 198.17, we still have 220.62 to reckon with, which would be sort of a double top. I know that this high from February is 217 and change, and that this descending channel top will be at that point over the next week or two. So this could be, by the end of May, sort of a double top potential formation. But we'll talk a lot about that in the weeks ahead. So getting with the downside now, I'm going to go back actually to this image here. And if we break 156.38 today, 152.74 is in reach, is likely the beginning of a range down to 146.06 that can absorb selling through May. No good reason to go short if you're a 2 to 3 week, 2 to 3 month position trader, near-term investor, unless we close below 146.06. And that's also another way of saying no good reason to liquidate a long position either. Now, if we close, say, below that low from Thursday of 152.37, which is just below 152.74 anyway, and you get spooked out of a long position, I don't have a problem with that. I'm just not comfortable playing the short side aggressively as we move into late May, June trade, unless we close below 146.06. And if we do, another 3 to 5 week sell signal back to this low area at 101.81, which would also be a full channel extension of this well-defined formation we're in right now. I've used it as a targeting mechanism for many years, and it works pretty well. So I think I'm just going to leave it at that. I've covered the day well. I'm pushing 10 minutes as it is. Please click like and subscribe. And I guess, this is one chart I haven't shown, 148.96 also, by the way, down here has meaning. It's that channel bottom that's actually performed quite well in the last week or so of containing selling pressures. It is still part of a big range of support. That's all I've got. Please click like, subscribe, check out wickedstocks.com. We have a full array of daily and weekly videos you may enjoy and appreciate, and will sort of enhance your bottom line if you're a trader or an investor. And it's only $47 a month, and you got a 5-day free trial that goes with it. So you set up the subscription, and you've got 5 days to bail, and your card will not be transacted. So there you have it. You have a great day. I'll be back tomorrow with Tuesday's Tesla.